Hello, friends. Welcome once again today on the Liquidity Narrative Classroom. So, we want to talk about today about three important concepts that help you in your trading. If you understand these concepts, it will be of a very important help in your trading journey. And those three concepts, at times people don't really understand what it takes. We are talking about the structure, which we've talked before. We're talking about market structure break, and we're talking about market structure shifts. Those three things: market structure, and then the market structure break, and then the market structure shifts. So in this video, we will just use like a particular time frame in order not to get you confused. But remember that every time frame is almost doing the same thing. Like when I said almost doing the same thing, the candle forms depending on the time frame, but we see the same structure. We see structures, we see break of structure, we see market structure shifts in all the time frames. They are always occurring. But for the sake of this class, let's look at Nasdaq. Maybe watching as you're watching which time frame we are at. We are right now. We are looking at the daily charts. So one of the first things the question you're going to ask yourself is, we ask this question: what is the market structure? When we say or use the word the market structure, we are looking at the overall trend of the markets. That means, are we in a bullish trend, or are we in a bearish trend, or is the market in a ranging trend? That is the overall structure. And these structures you can see both in a higher time frame, you can see in a lower time frame. But the good thing about this, or the best way to use it, is for you to be able to figure out the overall trend on the higher time frame. Like if you're watching from this daily time frame or going to the weekly time frame, you're watching what's the overall trend. As we said, we are using this chart. We can see it from here. Now we can see that the market has been in an uptrend. So we can easily say we are in an uptrend in this market from here. This has been an uptrend. So the overall trend of this has been an uptrend in this higher time frame of daily charts. That means if you're using your lower time frame, what you should be looking is an opportunity for you to take the trade high. That's to buy the trade. You will be more profitable, or the probability of winning will be higher than shorten this trend. Then if we look at also in the same chart, we can see in this side of the market, we can apparently see that the market has been in a bearish trend here. So this has been in a bearish trend also in this place. As you can see from here, the market has been going down. The same way also, if you look at your lower time frame, you can see from this level we have been on a bearish trend. We said we are in a bearish trend. That means more of selling. So you will do yourself good if you align yourself with a higher time frame trend. So that is what we call the market structure, which means which side of the market is which side is the market going? Is the market in a continuation of making higher highs or lower lows? If the market is in a continuation of making higher highs, we apparently look at it and say that is an uptrend. If it's making lower lows, we can apparently say the market is in a downtrend. So the higher time frame gives us the direction, which whether the market structure is in an uptrend, the market structure is a downtrend, and then the last structure of the market will be, is the market in a range? As you can see here, this market has been in a range. So we've been able to define these three different types of structure using just one particular chart. You see this, they happen in all the time frame. So we've seen an uptrend, we've seen a ranging trend, we've seen or a ranging market structure, and we've seen a downtrend, just looking mainly at a particular chart. So the main focus today is to be able to explain these structures. So after we have been able to define our trend, which is an uptrend or downtrend, then the next thing I hope this you understand this. There's an uptrend when the market is in a continuation of making higher highs. This high is higher than this one is higher than this one is higher than this one is higher than this one. So when market is ranging, that means there is no clear direction, whether the market is going up or the market is going down. Then when we're in a downtrend, that means the market is making lower lows. You can see here this low is lower than the previous low that the market has made. This particular low is lower than this particular one. So we can say this market has been in a downtrend, which or yeah, bearish trend in the side of the market. So that having been said, also we are not talking about maybe the lower time frame of it. If you go to all the time frame, you'll see all this. Then defining the next one, which is break of structure. So what taking a look at this particular trend. So the uptrend, we are expecting the market to make higher highs, right? And in a downtrend, we're expecting the market to keep making lower lows. So when we talk about break of structure, the break of structure can occur either in an uptrend or in a downtrend. What we are actually looking at in a break of structure is we've seen, sorry, that the market structure gives us a direction. We've been able to identify that our direction is upward, right? And or our direction is downward, right? That's market structure, uptrend and downtrend. It gives us direction of the market. After holding that, then we are looking at what next, the break of structure. In every break of structure is like a continuation of the trend you have identified. What do I mean? Let's take for instance, here we've identified that we are in an uptrend, and then we are watching this market. We said we want to be in more in buying than selling. You can see this market breaking each structure of the previous high. This was broken. That's break of structure. We can see also again this high was broken. That's break of structure. We can also see again the same way it keep making higher highs. This has been broken also. That's break of structure. Here has been broken also, break of structure. This high has been broken also, break of structure, until we get to this level where we are unable to clarify whether we are an uptrend or the trend continues or that the trend is changing. So let's also look at it on using the downside. If market is making a lower lows, we can also see if we get to this place also another break of structure, like we said that the name is the same, we can see this structure has been broken, break of structure. We can also see that the market broken this low from here. It is also break of structure. That's where market continue. Then we've defined that these are break of structure. That's why we said it can occur either in an uptrend. It can also occur in a downtrend, uptrend or downtrend. We get break of structure. So break of structure is apparently telling us a story of continuation. It's telling us that the market is likely to continue, and all the pullbacks are occurring to give you a chance as a trader to be in the market. Your duty is to find out where this pullback is likely to end, and then you will join the market to continue expecting the next higher pulled high to be broken for this structure to continue making higher highs. So the market pullback gives you an opportunity for you to be in the trend. We're also expecting this also to be broken, which we've defined before. So we've been able to define market structure. We've been able to explain break of structure just using the same chart. Then we've been able to explain the ranging, where market is like in a range, not making highs, not making lows, not giving a particular direction. Then we've been able to say that the market structure is the direction that the market is going. Is your duty to find that out from a higher time frame. Then we say that the break of structure says that the market continues. That trend of higher highs or uptrends or downtrends continues. That's break of structure. the structure that it has built before. It has broken it, and it has broken it and built something higher than that. And then it broke it again and built something higher than the previous one, break of structure. Or the structure it has built on the downside has broken it and built something lower than what it was before. That way, break of structure. I hope this has been a bit understanding and clearer. So now the third one we want to explain is the market structure shifts. We've talked about market structure. We've talked about break of structure because sometimes they get confusing to people. Then the next one we're going to talk about is the market structure shifts. When we talk about the market structure shift, we are saying, okay, we are in a particular structure. This is a market structure uptrend. And suddenly the market change from making higher highs and then start going lower lows. We say that the structure had shifted maybe from the uptrend now to the downtrend. We see this in all time frame. So here we can apparently say there is a market structure shift. The market stopped making higher highs and suddenly we broke to the downside. That's like the opposite of what the market was doing. That becomes a market structure shift. Let's move and see if we can get another explanation to what we are saying. Okay, let's look at this level. Let's check. Okay, let's use area. As we can see, this market was apparently making lower than the previous low, lower than the previous low, and suddenly the market again started to consolidate here. Suddenly we got markets became not giving us a directions, and then at some point the market started making higher highs. So after this we had a market structure shift. This becomes a market structure shift. The market has shifted from the downside now to the upside. That is what we call market structure shifts. So market structure shifts, we can apparently say, gives us a clue that the market is about to change its trend. Maybe, like as you can see, the market's shifted. We don't know yet if this, after this, that the market is going to continue down. And then suddenly, this major swing was broken. That the market now started making higher highs again. So we can apparently say the market has shifted from the downtrend or the bearish trend to now an uptrend. So you can see how we've used this particular single time frame chart, which is the daily time frame, to define these three concepts, which is the market structure, market structure markets, we've been able to define the market structure as a market structure, been able to define the ranging markets, we've been able to define market structure shifts and break of structure. So we've been able to define this three. Now the question is, how do you use them in your trading? We're able to get this. Let's say we've been able to define or identify our trend in this. Your duty is now to go back like on your day on your lower time frame to begin to figure out which or where am I going to join this trade in the lower time frame, right? So because we've identified is a an uptrend and you don't want to trade in the same time frame that you use as your higher time frame. Not that you cannot trade there, but you don't want to because you want to get the market earlier and get more profits. Because if you join this market here, probably you might be using your stop loss at this level, which is going to be a very huge money to use at your stop loss. And then you're targeting to exit the markets here. How about if you use the lower time frame, join this market, and probably your stop loss is somewhere here and you're targeting to get here, you will see you get more profit. So the higher time frame gives us the market structure, the structure of the market that we hold down. Then we'll go down to the lower time frame to start looking when the market is going to be in line with what the trend, which is the structure of the higher time frame, is saying. We've already said that the structure, market structure, is like a destination of where you are going to. You've known your overall destination. I'm going towards the south, I'm going towards the north. Then market structure break says, okay, we continue index. The only thing we do is to stop by and probably refuel our car or whatever you're using, or stop by to give people chance to rest if they are flying before they continue, to give them break. So that's it, market pullback, and then we continue. So market structure, um, break of structure is showing us a continuation of the direction we've already believed the market is going to, right? Then when we talk about market structure shifts, it says, oh, you've reached to a particular destination. Now we are going to take the people that want to travel back to where you're coming from along. So imagine you are traveling maybe from anywhere in the world to another, from a country A to country B. Some people are waiting in country B to be taken to country A. Why some people are coming from a country A going to country B? So that's it. We know we are going from A to B. Why people are waiting in B to come to A. So what we are going to do is to know when you've reached the country B, and then if you want to come back to A, you can join those who are waiting to get back to B. So market structure shift is telling us, okay, this journey is ending. Let's plan going back from the route we came from. So that's it. This is the three concept that if you understand, it will aid and be of a great advantage to your trading. I just wanted to make a quick video explaining the difference between the market structure, break of structure, and that of market structure shifts, and where and when to use them. Market structure tells us the direction we are going, whether up or down. Break of structure said that direction continues, whether up or down. Market structure shift, which some people call change of character, is telling us that the trend or the line or the route we are going, or we reach our destination, it is time for us to change direction. Your duty is to find out when that structure has reached its destination and is changing for you to also join it. But if not, for you, if you are doing a trending, for you to know exactly when this market is returning to give you an opportunity to take the trade. Let's take for instance, here, why will I know, okay, in a lower time frame that this market has gotten to a point where it might reverse and continue to this direction? Let's do a simple example here. Okay, watch this level. I want to find out what is here on a higher time frame. So going to the weekly time frame, I've not checked this before. Let's just see what's here. So on the weekly time frame, this is the same level that we know that the market is. So on the weekly time frame, I already know that this market is an uptrend. You see, another place in the higher time frame has said is an uptrend. But when am I likely to know that this market is going to change somewhere in this place, or is continue to go out? This particular level has been filled. Watch this level. This market got to this level and traded at this other block. So this is it. So if we drop on a daily time frame, let's watch this level. Hello. This is for those who waited till the end, because I know a lot of people might have clicked out. So let's go to the lower time frame, which is the daily time frame, and see exactly what happened at that level. This is the level, which is the other block. So this market traded into that other block of the weekly time frame and gave us the reason that this market is changing. You can see it. Market structure shift. It shifted and continued to go up, right? But this market that is going up has not given people opportunity to be in this trade. So that's why the market returned. What was the market seeking? Watch. The market is seeking something now. Let's say you are trading in the daily time frame using the weekly as your time frame. Look at it. This market came back to refill this fair value gap on the daily time frame. So even if you are using the daily time frame to be in those markets, you know apparently your stop loss will be somewhere here. You see this market came back to fill this fair value gap, even fill this order block, took out even liquidity and run liquidity at this level. That's, you can see it, it run liquidity at this level. So this is it, and then reverses. What the next thing? I apparently know, because we're an uptrend, that this market is going to break this trend to make a higher high. So if imagine you hold this trade till this, you can see it. So my target is that this market is going to break. So it's going to break this previous old high to make a higher high. And you can see market did exactly that. It broke this high, making higher high. Why? Because the weekly time frame had said we are in an uptrend. So this is just like a little way of how to use both the market structure, break of structure, and market structure shift in your trading. I hope this has been insightful to you. I hope to see you in the next class. Till then, trade safe and keep coming back for the classes. Okay, one of the things you should do before you leave is for you to go to your charts, mark out just like we did for you to understand this thing. Pick any time frame. You don't need to go to, it can even be 15-minute time frame just for the sake of study. Go through it, find out which trend is in that particular time. Use it as your higher time frame. Mark out, find out what is the trend, the structure. Is it uptrend or downtrend? Then mark out all the break of structures in that level, and then figure out when the market structure shift is occurring. Find out where the market structure shift is occurring. When you draw it, go back to a lower time frame, like the 5 minutes or 1 minute time frame, and see what that lower time frame had said. And remember, you want to be trading in line with your higher time frame of choice. Thank you. Prefer to choose structure over speculations and not opinion.